Ever wondered how to effortlessly grow your wealth without even thinking about it? You're not alone. Many people dream of a comfortable financial future, but the idea of investing can seem daunting. That's where set it and forget it investment apps like Acorns come in. But does Acorns actually build wealth, or is it just a clever marketing gimmick? Let's dive in and find out. Acorns, for those unfamiliar, is a micro-investing app that rounds up your purchases to the nearest dollar and invests the spare change. It's incredibly user-friendly, making investing accessible to even the most financially intimidated. But does this roundup strategy actually generate significant returns, or is it simply a slow drip of money into the market? To answer this, we need to understand a few key concepts. Compounding. This is the magic of investing. Your initial investment grows, and the earnings from that growth then generate further earnings. Over time, this snowball effect can lead to substantial wealth. Dollar cost averaging. Acorns utilizes this strategy. By investing small amounts consistently, you avoid the risk of investing a large sum at a market peak. This helps smooth out market fluctuations and potentially lower your average cost per share. Diversification. Acorns offers various investment portfolios, each tailored to different risk tolerances. Diversification helps spread your risk across different asset classes, reducing the impact of any single investment's poor performance. Now, let's analyze how Acorns performs in these areas. Compounding. Acorns absolutely leverages the power of compounding. Even small, consistent investments can grow significantly over the long term. The longer your money is invested, the greater the impact of compounding. Dollar cost averaging. As mentioned, Acorns inherently employs dollar cost averaging. This strategy is particularly beneficial in volatile markets, helping you ride out market downturns and potentially buy more shares when prices are lower. Diversification. Acorns offers a range of portfolios, each with varying allocations to stocks, bonds, and other assets. This diversification helps mitigate risk and potentially enhance your long-term returns. However, Acorns isn't without its drawbacks. Fees. While Acorns offers a free version, the paid tiers come with fees. These fees can eat into your returns, especially for smaller portfolios. Limited control. Acorns offers limited control over your investments. You can choose your investment portfolio, but you don't have the flexibility to pick individual stocks or actively trade. Potential for low returns. While Acorns can build wealth, the returns may be modest, especially compared to more active investment strategies. The verdict. So, does Acorns build interest? The answer is yes, but it depends. Simplicity. Acorns is incredibly user-friendly and makes investing effortless. Accessibility. It lowers the barrier to entry for new investors. Dollar cost averaging. This strategy can help mitigate risk and potentially improve returns. Diversification. Acorns offers diversified portfolios to suit different risk profiles. Fees. Fees can impact your long-term returns. Limited control. You have limited control over your investments. Potential for low returns. Returns may be modest compared to more active investment strategies. Acorns can be a valuable tool, especially for beginners who are new to investing. It's a convenient way to start building wealth with minimal effort. However, it's crucial to understand the limitations and consider the fees associated with the paid tiers. Ultimately, the best investment strategy for you will depend on your individual financial goals, risk tolerance, and investment knowledge. If you're looking for a simple, hands-off approach to investing, Acorns could be a good option. But if you're seeking greater control and potentially higher returns, you may want to explore other investment avenues. With that said, thanks for watching, and until next time.